Ladies and gentlemen, good day, and welcome to KOLTE PATIL Limited's Q3 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions when the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Shiv Muthu from Adfactors PR. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us on the Q3 FY23 results conference call of KOLTE PATIL Developers Limited. We have with us today Rahul Talele, Group CEO, Deepti Rajput, Vice President Investor Relations, and Pawan Lohia, Vice President Finance. Before we begin, I would like to state that some of the statements in today's discussion may be forward-looking in nature and may involve certain risks and uncertainties. A detailed statement in this regard is available in the Q3 FY23 results presentation that has been sent to you earlier. I would now like to invite Mr. Rahul Talele to begin the proceedings of this call. Over to you.
Good afternoon. A very warm welcome to everyone present on this call. And thank you for joining us today to discuss the operating and financial performance of KOLTE PATIL Developers Limited for the third quarter of FY23. I would like to begin by sharing with you our views and takeaways on the real estate environment, followed by an overview on the highlights of third quarter and 9 months performance. Deepti will then take you through the key financial highlights, and we then look forward to taking your questions and suggestions during today's call. To begin with, Indian economy continues to perform well amid the global inflationary environment that has created unprecedented situations in many parts of the world. Significant increase in interest rate has impacted consumption spending in key markets internationally. It is quite encouraging to note that India remains fundamentally resilient in a tough global economic environment and is poised to grow at about 7% in the current financial year 23. Further, last week's budget announcements are reflective of the government's confidence in the economy, and the real estate sector stands to gain from some of the announcements. Focus on sustainable cities, strategic urban planning, infrastructure expansion initiatives, increasing the fund for PMAY, are all positives, especially from the perspective of long-term housing objectives. Technology and digitization initiatives will go beyond sectors, creating multiple new-age job opportunities in the process. In all, higher capex outlay and thrust on green growth should help India build a more sustainable future. From our perspective, while interest rates have increased in recent months, affordability still remains intact and demand robust. We believe leading real estate players with credible market reputation and strong buyer connect are strategically at an advantageous position. During the third quarter of the financial year, the company achieved highest ever quarterly sales value of rupees 716 crore, a growth of 28% on a year-on-year basis. We also reported highest ever quarterly sales volume of 1.13 million square feet, a growth of 31% on a year-on-year basis. This performance was backed by 6 new project launches in Pune and Mumbai, along with continued momentum of customer traction in our existing sustenance phase projects. During the quarter, the last 1 month, we have cumulatively launched 2.77 million square feet with the top line potential of 1960 crores. Robust sales and good construction pace have resulted in firm growth of 22% YOY in collections for 9 months FY23. We have received OC to the tune of 2.7 million square feet during the 9 months FY23, of which 60% OCs were obtained in the month of December 22. The revenues for which will be recorded in Q4 FY23. Here, I would like to share that the profitability during Q3 FY23 was impacted on account of 2 projects in Pune, which had low gross margins, resulting in lower overall gross profit for the quarter of rupees 31 crore, which was insufficient to cover overheads. The OCs for these two projects were received towards the later half of the quarter under review. The revenues and costs for these low margin projects have been fully accounted for Q3 FY23. In other words, there is nothing pending to be recognized in the coming quarters towards these projects. In summary, we are confident of closing the year in line with our stated pre-sales and revenue guidance. Margin profile for FY23 remains intact, and we hope to report better margins as compared to FY22. For the 9 months ended 31st December 2022, our reported sales value stood at rupees 1528 crore with volumes of 2.3 million square feet compared to 1238 crores and 1.93 million square feet in the same period previous year. The strategy of business diversification remains well established as Mumbai and Bangalore have shown contribution of 21% during the 9 months FY23. I am glad to report that we have reached a significant milestone as our flagship project Life Republic surpassed the 500,000 volume mark by clocking 6.62 lakh square feet during the quarter. Apart from this, we have also continued to witness firm realization at Life Republic and across projects. I am happy to share that during the quarter we launched premium row houses for the very first time and received overwhelming response and are encouraged to roll out this format in the future too. Price bracket has widened from rupees 30 lakhs to 80 lakhs to 30 lakhs to 2.5 crore at Life Republic Township, supporting better realizations and volumes. KPTL has a history of collaborating with several domestic and international financial institutions and corporates. This has helped us accelerate growth, innovate and diversify our project portfolio. In recent development, KPTL partnered with Marubeni Corporation, where the latter will invest 206.5 crore in KPTL's Pimpli-Nilak residential project and will be entitled to 2.85 lakh square feet of saleable area in the project. The Pimpli-Nilak residential project, one of the priority launches in our portfolio, has a total development potential of 8 lakh square feet. With this new collaboration, we see rapid development of another high quality residential project in the premium luxury segment, which is 24K, complementing our larger mass market portfolio of offerings. We believe that this association with a leading global organization of repute once again highlights our organizational capabilities and governance standards. Improved affordability parameters from the longer-term perspective, persistence of flexible hybrid work formats, and sustained investments in infrastructure by the government will certainly continue to support housing demand across key markets including Tier 2 and Tier 3 cities. Based on our diversification goals, we continue to prudently evaluate business development opportunities across the 3 geographies of Pune, Mumbai and Bangalore. With increased consolidation and formalization of sector, buyers and landowners are turning to quality developers, and KOLTE PATIL is well positioned to forge meaningful partnerships with a keen focus on delivering value across the entire ecosystem of stakeholders. With a healthy balance sheet, comfortable debt levels, strong launch pipeline and brand connect, significant business development pipeline and financially prudent growth plans, we are confident of delivering profitable growth for the current year, also for the FY24, with pre-sales growth in the range of 25 to 30%. I would now like to hand over to Deepti to share the financial highlights for the quarter and 9 months ended 31st December 22.
Thank you, Rahul. Good afternoon, everybody. I will now briefly take you through our financial performance for the third quarter of FY23. Based on CCM-based accounting, in Q3 we clocked revenues of rupees 368.1 crore, up 53% YOY, whereas in the 9-month period we reported revenues of rupees 691.5 crore. EBITDA for 9 months FY23 stood at rupees 15.8 crore. Here we would like to remind you that recognition of revenue and profits are dependent on the timing of project completion based on statutory accounting guidelines. Our net debt to equity stands strong at 0.21 as on December 31, 2022, and the operating cash flow for the quarter stood at rupees 120 crores. We have reported highest ever quarterly pre-sales numbers and look forward to maintaining the momentum going ahead as well to meet stated growth objectives. With the efforts put in by the entire team, we look to end the year on a strong note and look forward to creating bigger milestones in the future. On that note, I conclude my opening remarks and would like to ask the moderator to open the line for Q&A.
Thank you very much, ma'am. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah, hi. Good afternoon, and congratulations on better set of numbers from the previous time. I hope the momentum continues. Okay. I have 2-3 questions. One is related to Bombay. Okay. We state that land bank in Bombay is around 60.69 million square feet. Okay. How soon can we bring this inventory to commercialization? And it is across how many redevelopment projects? Means what is the concentration? Okay. So this is the first question.
Okay. Thank you, Himanshu. See, in Mumbai, currently our 3 projects got launched, which is in a sustenance phase, and recently we have launched 2 more projects, again a redevelopment project in the month of January. So that is a Sukhnivas and Golden Pebble project. So we are confident of achieving a good pre-sales number in these 2 new projects as well, in order to continue our growth story in Mumbai, what we achieved in earlier 3 projects. And apart from this, there are 3 projects which are from a BD perspective have already been closed, and likewise we are working on a multiple BD projects in Mumbai. So certainly see what differentiating things that we are doing from a BD perspective is we are negotiating with the landowners, we are negotiating with the society. Simultaneously we have applied to the various basic approvals for that particular land parcel, so that the deal closure. So simultaneously our legal and technical due diligence is happening, simultaneously our approval is also getting processed. So the timeline between the BD closure and the launch will be significantly reduced in the projects which we are going to acquire in the future for the KOLTE PATIL.
This 0.69 million square feet of land inventory, is it done deals or this is work in progress? We should assume means society and they will be generally all society redevelopment projects only in Bombay.
Yes, that's correct. So these are the done deals, and we are working in the various stages of initial approvals in these projects.
Okay. And one more thing, in the markets where we are present, okay, where you are seeing the maximum traction in terms of volume and price appreciation, okay, and how is the business development progressing, especially in Bangalore and Mumbai? In terms of Bombay, you had also stated that we might now start looking at outright sales. So is there some progress happening on that outright sales in Bombay also?
So market is 3 geographies are very good where we are currently operating. Our launch performance in Pune and Mumbai is one example of that. So we are bullish on these 3 geographies. So as I mentioned in our earlier interaction, so there are multiple BD pipelines that we are working upon. So there is a strong BD pipeline. Apart from Pune, there is a strong BD pipeline in Mumbai as well, and we are evaluating a couple of projects in Bangalore as well. So certainly in a coming few months, couple of months, there will be some the closures happening for us.
Okay. And one last thing, can you give some thoughts on your experience of how are you trying to improve customer experience in CRM? Okay, so that we and so that we can have more reference sales, okay? Currently, what percentage of our sales would be from reference sales?
So Himanshu, thanks for asking this question. A couple of years back, we used to achieve 3 to 5% of referral sales. And because of the right measures we have taken in the last 2 years, our referral sale was around 7 to 9% in last financial year. And in this 9 months, I'm happy to share our referral sales have jumped to 15%. So we are working on various initiatives, we are working on customer engagement activities, we are working on digital platforms which will have the real-time connectivity with the customer. So that will, I'm confident that this will further add up to my referral sales for the company.
Okay, and one last thing, can you give me some idea on 24K or luxury projects and what are our plans? Because what we read is the luxury market is booming, okay, across the country. So is not this product also more profitable for us? And are we focusing more on 24K project more, or even the business development focus on 24K, or how are your thoughts on that?
So Himanshu, see, our Baner project is a 24K, which we are expecting to get launched in the this ongoing quarter. Apart from that, as I mentioned in opening remarks, our Pimple Nila project is also under a 24K brand. Apart from this, earlier in township, we used to sell an inventory in a price bracket of 30 lakhs to 80 lakhs, wherein we proposed a spacious and upmarket 3 BHK product around 1 crore. So earlier we used to sell at 80-85 lakhs, and now we are selling at 1 crore. So from a township perspective, that is not exactly a 24K product, but that is the journey towards having a 24K or a premium product in the township. Apart from that, within a couple of days, we could offload the 50% of the inventory in our row houses. So that is also a positive sign for us, and certainly going forward in the near future, we are evaluating a multiple 24K project closures as well as launch of 24K projects in our existing inventory.
Okay, thank you, and best of luck for future. Yeah, that's all from my side.
Thank you. The next question is from the line of Pritesh Seth from Motilal Oswal Financial Services. Please go ahead.
Hi, thanks for the opportunity, and congrats on a great performance on the operational side. Firstly, on the P&L, what all projects were recognized for revenue in this quarter? And if you can just highlight, what were the 2 projects which had, this quarter? That's my first question.
Okay. Thanks, Pritesh. So in this quarter, our Wakad project, which is Western Avenue and Green Olive, got recognized, which has the larger revenue recognition. Apart from that, a spillover of last quarter, so there are a couple of more projects. But these are the 2 projects which has the higher contribution in the revenue top line in this concluded quarter. And in this project, there were low margins, and apart from this, there are multiple projects. We have received the OC in the last couple of months, wherein the revenue recognition will happen in the quarter of Q4, wherein we are expecting a GP in the range of 30 to 40%, EBITDA in the range of 20 to 25%. So we are in line with our, the margin, which are targeted margins for us.
Thanks. That's helpful. Any specific issue you wanted to highlight on, Wakad and Green Olive being a low margin? Was the sales velocity not, as per expectations, or any specific thing which led to low margin in these projects?
Not actually, but there was the project started. This project started almost 10 years back. The last phase got developed now, and because of that, there were margin pressures.
Sure. Got it.
We have accounted fully, the full recognition has already happened in Q3 for this couple of projects.
Got it. Sure. Good to see launches also picking up this quarter. Now, we had highlighted last quarter that there are at least 6.2 million square feet of projects which are the first phase of the total launch pipeline that we have. which is under planning stage. Out of that, probably we have launched 2.8. How close are we for rest of the launches? Is it probably next 2 quarters is where we are looking to launch all of that 6.2 million square feet?
So out of this 6.3 million square feet, we are expecting to have most of the launches in next 3 to 4 months itself. And apart from this, as I mentioned earlier, so we are working on some BD opportunities wherein the projects are kind of launch ready or nearing a launch. So that will certainly add to our volumes.
Got it. That's helpful. So we have done well in terms of cash flows, in terms of launches. Now sales is also picking up. In last 2 years, that's where we have ticked off the boxes. Only thing that we are looking forward to is the business development. While you have been highlighting that we are obviously close in terms of closing the transactions. But any specific pipeline you have in mind which are right now at the advanced stage of discussion and probably that might get closed in next couple of quarters or 1 year or something?
So Pritesh, there are multiple such opportunities which can get closed in next couple of quarters. And at the right time we'll announce that to market. But having said that, in order to based on our prior experience, we are not only negotiating with the landowners from a legal and the technical point of view, but also simultaneously we have applied to various states of approval, so that on one side we are closing the BD deals, and on the other side in couple of months the deals can get launched to the market.
Sure. Got it. So we will definitely see some progress over the next couple of quarters. That's what you will.
In fact, in next couple of months, you will see some progress.
Sure. That's very helpful. That's it from my side. All the best and keep up, delivering good performance. Thank you.
Thank you, Pritesh.
Thank you. The next question is from the line of Rohit from iThought PMS. Please go ahead.
Hello.
Please proceed, Mr. Rohit.
Yeah. Hi. Yeah. Can you hear me?
Your voice is muffled, sir. I would request you to use your handset, please.
Is it better now?
Yes, sir. Please proceed.
Yeah. Hi, Rahul. Hi, team. Congrats on a good operational quarter. So, this quarter, we've done about I'm just talking about P&L for a minute. I think in the previous Concall you had guided that in H2 you probably do close to 1,300 to 1,500 crores of revenue recognition. So the balance, what will be largely done in Q4, is that correct, or is there some change in that earlier guidance that you had given?
Thanks, Rohit. That's correct. So we are going to deliver as per the guidance given in earlier discussion. So we have already received multiple OCs in last 45 days. So all of that revenue will get recognized in this ongoing quarter.
Right. And you don't see any issues in other projects, unlike the ones that you had in these 2 projects in Wakad and Green Olive. Unlike these 2 projects, you don't see any profitability issues.
No, not at all. In fact, the margin numbers are good, which are as per our targets.
Got it. And even for the projects that are getting launched now, what are the kind of gross margins that we are looking at right now? I mean, the ones that are getting launched or which were launched in the last maybe 6 months.
So we are envisaging a margins of 35% plus or minus, in the range of 30 to 40%, depending on the deal structure and like that, and EBITDA margins in the range of 20 to 25%.
Understood, sir. And sir, on this Pimpri project, so we have a total sales potential of about 0.8 million square feet. And I think you, in your note, you mentioned that 34% of that, which is 0.3 million square feet roughly, is for Marubeni Corporation. And they have invested some money in exchange of that. So have you got any money from them? And can you just explain this transaction? When will that money come in, and how will this be done?
So this is a kind of a inventory sale, and this money will be received in next couple of months. And likewise, as I mentioned earlier, we are working on a very strong BD pipeline, and this fund will be utilized for the utilized as a growth capital for the company.
So they will get the inventory and then they will, I mean, this is a purely, you mentioned this is a 24K project. This will be like...
Yes, this is a kind of an inventory sale. So we agreed on one number, and we are getting a 100% down payment.
Understood. Understood. And so this you mentioned in terms of a priority launches of 2.7 million that we have. So sorry, you mentioned something that we are planning to launch all the remaining launches in the next 3-4 months, all the priority remaining launches that are there in the next 3 to 4 months?
That's correct.
Okay, that's very good to hear, sir. And last thing on this merger that is happening. So two things. So we were planning to demerge our retail arm, which we are not doing now. Is there anything which has happened which is leading you to do that? Are we planning to make a foray into retail or anything of that sort? If you can share.
Rohit, I think this is not a significant, the contribution in our business, and
right.
Hello.
No, so yeah, right now it may be not significant, sir, but just from a future point of view, I just wanted to understand, is there any change in strategy, or is there an addition to the strategy that we are also looking to foray into retail, and that's why we have not demerged now, which we were earlier thinking? That was my question.
So it is not from the business perspective, it is purely from the structural perspective. No.
Okay.
So we don't have any plans to foray into retail.
Understood. So, sir, I'll get back in the queue if I have more questions. Thank you very much, and all the very best.
Thank you.
Thank you. The next question is from the line of Parikshit Kanpal from HDFC Securities. Please go ahead.
Hi, Rahul. Congratulations on a decent quarter, sir. So my first question is on deliveries. So the first question is that 2.7 million worth of about 16 billion of, I would say, roughly on 6,300 realization worth of sales should have moved into revenue recognition, but for 9 months we only had 700 crores of revenues hitting P&L. So just wanted your thoughts why there was a delay in recognition, and in fourth quarter what are the deliveries planned in million square feet and in value?
So thanks, Parikshit. So basically, delivery depends on the structure of the building. Delivery depends on how much time that project will take. So it is not certain that the project will, of same height, there is no basement and like that. So it depends on the technical things. There is no delay in the deliveries. So that is as per our business plan, as per our, the construction schedule. So, likewise in Q4, we are targeting to have the revenue recognition to the tune of 800 to 900 crores. So in total, around 1600 to 1700 crores of revenue recognition will happen in this financial year. And as I mentioned earlier, the margins are intact for us.
I think I was referring more to deliveries which you have given in the presentation of 2.7.
I'm sorry to interrupt, sir. We are not able to hear you clearly as your voice is a little bit muffled. Sir, can you please use your handset?
Using my handset. So in the presentation, sir, you have mentioned 2.7 million of deliveries. So when you say deliveries, that means the OC would have come on these, right? And you said there's some delay in revenue recognition against these deliveries. So just want to understand why there was a difference when OC came. They should have moved into revenue recognition.
So the deliveries and this OCs particularly has happened in the tail end of this concluded quarter, and we wait for the 30 to 45 days, depending on the agreement with the individual customers. Suppose that it will go to revenue recognition for us.
Okay. So it will largely hit in the fourth quarter. Yes.
That's correct.
As you rightly highlighted. So my second question is on business development. So just wanted your thoughts on what has been the 9-month business development, new business development, which you've already agreed or formed up with your partners or landowners, and what is the pipeline for fourth quarter, and how much of that you expect to conclude in fourth quarter?
Parikshit, currently we are holding a top line potential of 22,000 crores. Out of that, as I mentioned, 7,700 crores are the priority launches. 2,000 crores worth inventory has already been launched. So keeping this aside, so company has a potential of around 15,000 crores. 22,000 minus 7,000 is 15,000 crores. So that is available within the, our existing land bank itself. Apart from that, as I mentioned, we are working on multiple BD opportunities, and that is the reason to go for a Marubeni transactions, and that is the reason to go for even the Planet entry at a KOLTE. So we are very certain about the closure of these BD deals. But at this moment of time, since no deal has been concluded from a legal perspective, hence we have not announced to the market. But at the same time, the commercial discussion has been locked in multiple deals. So next few quarters you will see multiple BD announcement from our side.
Yes, on the slide you have mentioned 7,000 crores of new business development, which is slide 21. So this 7,000 is targeting is the advanced pipeline where we are in the final stages of closure, or this is a prospect pipeline? And on this, how much do you expect to close in Q4 and how much in FY24?
So 7,000 crores pipeline is at a very advanced stage of discussion. So out of that, we are expecting to have a closure in the ongoing quarter, maybe around, 40% of that. And apart from that, we have already closed 1,400 crores of KOLTE deal. So in total, around 4,000 crores of BD closures in this, the quarter. And there can be a little spillover to Q1. So, but we are on track to have this BD closure.
You're saying so out of 7,000, 40% is roughly about 2,800 may happen in Q4. And this KOLTE deal is over and above this is 1,400, or it is part of 2,800?
KOLTE deal is a part of 7,000 crores.
So that 2,800 you are so this 2,800 crores which is at 40%, so that includes KOLTE, or KOLTE is over and above that?
KOLTE is excluding that.
Wow. So this quarter will be like almost 2,800, 38. So almost 4,200 crores you expect to close in Q4.
That's correct.
Wow. And how much will be the cost of land cost here? Approximately the capex which you may incur on the land on this 4,000 crores of deal.
So land cost, since the deal structuring is different, every deal has a different structure. Some are outright, some are, JV transaction. But whatever the top line that we are talking about, around 8 to 12% is our, the upfront investments.
Okay, so on this 4,000, it's maybe 8 to 12%, roughly about, we can say maybe 400 to 450 crores could be the investment in land.
That's correct.
Okay, great, sir. That looks fantastic. The pipeline seems to be very strong, and all the best to you for closure of this deal. Thank you.
Thank you. Ladies and gentlemen, please note, if you are using a speakerphone, please pick up your handset while asking a question. This is required to ensure optimum audio quality on the call. Thank you. The next question is from the line of Prithvi Raj from Unifi Capital. Please go ahead.
Rahul, hi. I just have a couple of questions. See, the first one, you mentioned a land bank of 15,000 crores in the previous question. So if I have to take out the Life Republic land bank, what will be the remaining part?
So Life Republic is around 11,000 crores. So apart from Life Republic, the other will be around 4,000 to 5,000 crores.
Got it.
So at this moment of time, so out of 22,000 crores, 11,000 crores is from Life Republic, and 11,000 crores or 12,000 crores is from non-Life Republic. But post this priority launches, so it's a blend of Life Republic and non-Life Republic projects. So around 8,000 out of 15, around 8,000 crores will be from Life Republic.
Okay, that's helpful. And coming to the priority launches, you already mentioned you launched 2.8 million square feet. Okay, out of the remaining projects, for how many projects you already have approvals in place?
Sorry, can you please repeat?
For the remaining projects, where you didn't launch and which you're showing in the priority launches slide, did you get approvals for all the projects or still approvals are pending?
So approvals for the Life Republic, we have the approvals for, the key approval, that is environment clearance. We have the environment clearance for all Life Republic projects, which are R16, R20 and 22. Apart from that, we have already received the environment approval for Baner project as well, and Pimple-Nilak and Tathaude project as well. Pimple-Nilak is in process. So likewise, we are in a very advanced stages of approval in this the remaining priority launches.
So wherever you have
we are confident of launching in next 2 to 4 months.
Okay, that's helpful. Thanks, Rahul. Thanks a lot.
Thank you. The next question is from the line of Viraj Mehta from Equirus PMS. Please go ahead.
Yes, sir. Thank you for explaining. So, sir, out of the 30 crore loss that we have reported this quarter, what was the overrun in the 2 projects which has led with lower gross margins, which was not accounted for earlier, which has led to this loss?
So, hi Viraj. So basically GP for these 2 projects was 31 crores. But as you are aware, we follow up accounting, the CCM methodology, and because of that, the overheads of the last quarter, we have to account the entire overheads of the last quarter. Since there were multiple launches, since there were, the good momentum happening in the internal system, so overheads are on the higher side as compared to the revenue got recognized.
Right.
So overall, GP percentage was around 9% for these 2 projects. For all projects together.
Sure. And sir, in the TV interview today, you had mentioned that we will still cross 20 to 2300 crore of pre-sales this year. That is including Baner or not including Baner?
See, yes, there is a partial dependency on Baner project as well. But we are confident of launching a Baner project in the month of March itself, and there is a good traction. And considering that, we will be on track to deliver this pre-sales number of 2300 crores. So just to tell you about Baner, since as I mentioned in the earlier calls, so in Baner project, we have acquired a small land parcels adjoining to this project, because of which, the project got a very good layout and we can command a good premium as compared to the earlier rates we have envisaged. So that has happened in the last quarter. So now we are planning to launch this project at 9,000 rupees a square feet as compared to our business plan guidance of around 7,500 to 7,800 rupees.
Sure. And sir, next year, looking at the momentum, what's the kind of realization increase you can see in both your key markets, as in Pune, if you can distinguish between LR and non-LR, and Bombay?
Okay. So realization per square feet again depends on the, where we are selling maximum inventory. Like what you have seen in the current quarter we have sold a significant inventory at Life Republic. Hence the realization is on a lower side because the Life Republic is a MIG product. Likewise, as there are multiple 24K and premium projects as well as the launches are lined up in Mumbai. So considering that, our the realization in the next year will be in the range of 6,600 to 6,800.
No, sir, that's combined. But I'm saying like-to-like product.
Okay.
Realization increase next year?
So like-to-like project, see, when we have the multiple phases. So just to tell you, we used to achieve a APR of 5,400, 5,200 at Life Republic, wherein we are currently achieving an APR of 5,900, which is a blend of partial high street retail and the residential. So we will going to continue with this kind of APRs at Life Republic. Having said that, a project in Mumbai wherein we have taken a price rise to the tune of 2,000 rupees a square feet in last 1 year. So certainly wherever we'll get an opportunity to increase our price, we'll go for it without hampering the volumes.
Thank you. Thank you so much, Rahul, and best of luck.
Thank you.
Thank you. The next question, the line of Shreyans Mehta from Equirus Capital. Please go ahead.
Thanks for the opportunity and congratulations on a strong set of pre-sales. So again, dwelling more upon the EBITDA loss. So if I adjust for the note number 9, the EBITDA loss would have been much higher. So can you help me reconcile how much is on account of this to the projects which we've done? So adjusted for that, what would have been our EBITDA margins or the gross margins?
So Shreyans, I would love if you can take this offline. I'll ask my teammate to reach out to you.
Sure. Okay, sure. So secondly, any updates of in terms of the note 10, wherein we have made some investments in university developers. So what is that pertaining to?
So as I mentioned, we are working on a multiple BD opportunity. So this is one of the BD opportunity that we are evaluating in Mumbai. So in that regard, so jointly we are evaluating a couple of BD opportunities with the university developers. So hence we entered into that SPV.
So have we committed any amount, or so how will the dynamics work?
No, see, the commercials are not yet closed, but we are evaluating a joint BD opportunities with university developers.
Got it. Sure. Sir, and in terms of BD, would you like to assign any number, which you are evaluating?
So, Shreyans, there are, at this moment, there are multiple 1,000 crores of BD that we are evaluating. But as I mentioned earlier, around 7 to 8,000 crores of very advanced level of BD that we are evaluating.
Got it. Sure. And sir, if I compare our last quarter presentation to this quarter presentation, a few projects like Crown and Giga have now been transferred from under approval to land bank. So any particular reason for it?
So see, in Giga we have already received the approval, so project is already been, but it was not a part of priority launches, because it's a commercial development, so it was not a part of priority launches. Hence, we have, highlighted that separately.
Okay, sure. And sir, lastly, in terms of guidance for FY24 in terms of deliveries?
Deliveries, in FY23 and 24, we are, confident of delivering numbers of 3,000 crores. So out of that, whatever that we are going to achieve in FY23, that will get deducted. Because, so there is a certain time it takes to deliver the project.
Right. So 24, so 23 we are saying 2,300, 24, 3,000. So 700 is what you are indicating?
No. See, in these 2 financial years, in total, around 3,000 crores of revenue recognition will happen. So out of that, 700 crores has already been, taken into accounting.
Right.
8 to 900 crores will happen in this quarter. I mean, in total, 1,600 crores in FY23, and the balance will be in FY24. In next in next 5 quarters, around 2,300 crores of revenue recognition will happen.
Got it. And in terms of margins, would be in line with what we are guiding for?
That's correct.
Okay. Sure. Thank you and all the best, sir. Thank you.
Thank you. The next question is from the line of Aegis Lakhani from Unifi Capital. Please go ahead.
Yeah, congratulations on the strong set of numbers. Most of my queries are answered. Just one that, sir, this Marubeni cash flows, when are you expected to receive that by? And will you be using those cash flows against the, BD expenses that you called out for the land of 400 to 450 crores, that broad number? So will the cash flows from Marubeni be used for that growth?
Certainly, our intent is to utilize this cash flow as a growth capital for the company. So we are in a final leg of approvals for this project. Once we receive that, So this money can be received and it will be deployed to BD opportunities. So we are expecting a closure in next couple of months.
Got it. So we should expect the monies from Marubeni to come in the next quarter only, or it can flow into first quarter?
So, I mean, maybe in the month of March or first month of the next quarter.
Okay, okay. And sir, the Marubeni contract that you have, it's an outright sale against a specific 2.8, 2.9 lakh square feet. So there's no recourse on that, and there's no recourse on that sale, right? And how does because I think you have a certain portion which is sellable as well in that project. So is it that once you're completed with your sale proceeds, he can start, or is there any pecking order like that?
No, well, it's a earmark inventory. We are going to offload that inventory to the market. So this is not something that Marubeni will sell the inventory in the market. So we are going to have the entire control on that project from a marketing, sales, and as well as from a construction perspective. And there is no recourse.
Got it. Okay. So you are only going to sell it. It's just the capital that they have paid against that earmarked. Got it. Got it. Okay, sir. Thanks.
Thank you. The next question is from the line of Dhananjay Kumar Mishra from Sunidhi Securities. Please go ahead.
Yeah, hello sir. Just one clarification. In the presentation, the 2.7 million square feet delivery, it is for full year, which is we are going to deliver, or it is already we have delivered 9 months.
What we have mentioned, 0.7 million square feet of OC we have already received. So this is the OC received in 9 months.
Okay.
And there are some OCs which are expected to get received in next 1 month. So all of this, together around 1600 crores of, revenue will get recognized in this financial year.
Okay. Because you mentioned that 60% of this 2.7 million square feet where the OC is received, but we have not booked any revenue. So in that
will spill over to Q4. Apart from that, there are some OCs which we are expecting to get received in next 15 days. So that will add.
So okay, in addition to 2.7.
Yes, that's correct.
And what will be the average realization in this delivery?
Around 5,000 to 5,200.
5,200. And next year we are saying similar kind of delivery. But
that's correct. So around 1,300 to 1,400 crores.
Okay. And margin will be about 20%, 22% overall margin for the full year. EBITDA margin. Okay. Yeah, that's all from my side.
Thank you. The next question is from the line of Zaki Nasir, an individual investor. Please go ahead.
Can you hear me?
Yes, sir. Please proceed.
Yeah. Sir, congrats on a good set of booking numbers. But sorry to ask a very basic question, sir. If I understand right, we would be ending the year on a P&L top line of 1,700 crores, and the guidance for next year is 2,200 crores, sir. Correct me if I'm wrong, sir.
No. So we will end from a revenue perspective around 1,600 to 1,700 crores. For next year, our numbers will be in the tune of 1,300 to 1,400 crores. This is from an accounting perspective, CCM perspective. From a pre-sales perspective, we'll end this year with a 30% growth as compared to last year. That is 2,300 crores, 22 to 2,300 crores. And for the next year, we are envisaging a growth of 25 to 30%.
No, I'm just asking you the revenue number which will appear on the published results kind of stuff, sir.
1,600 and 1,300. 1,600 for
next year will be 1,300.
1,300.
Okay, so maybe the timing between the launches and the way it is accounted for would play a big part in it, correct?
That's correct. So whatever that the inventory that we are currently selling, will get delivered in next 2.5 to 3 years. So at that time, this pre-sales number will get converted to a revenue.
So, I mean, if I understand correctly, this year we will see a 1,600 on the P&L, and next year we will see around 1,400 on the P&L. And maybe the deliveries will come better in 2025. I mean, whatever you are launching now, because I think it takes between 6 to 8 quarters for these to fructify into numbers.
Yes, depending on the project, configuration.
And
sorry to interrupt, Mr. Nasir, your voice is muffled, sir.
Is it okay now?
Yes, sir. Please continue.
Yeah, sir, out of our land bank, you mentioned that it's around 15,000 crores. So is this entire thing in KOLTE PATIL name, or it's in a promoter group company, sir? And what if it is, what percentage is in KOLTE and what percentage is outside KOLTE, sir? Thank you.
So this is a own land bank. This is a KOLTE PATIL land bank.
So this 15,000 crores is entirely KOLTE PATIL land bank.
That's correct.
Okay, sir. Thank you.
Thank you. The next question is from the line of Dhwanil Desai from Turtle Capital. Please go ahead.
Hi, Rahul. Good afternoon. So the first question is regarding the LR. So LR, we used to do around 1 million square feet pre-sales every year, and this year we have crossed close to that in 9 months. So going forward, how do you guys think about monetizing LR? Is there a kind of thinking behind increasing that 1 million to much higher number? And if so, what kind of launches that we're looking at?
So certainly we are confident of our capabilities at LR. So if you see in the priority launches, around 3,000 crores worth projects are from Life Republic. Out of that, we have launched significant amount of projects already, and as you mentioned, 1.1 million square feet has already been achieved. So the best part which has happened in the last quarter, so we have break the jinx of crossing 85 lakhs per unit at Life Republic, and that is very positive move for the group, because now we call it a supermarket of products. So the new supermarket of products is right from 30 lakhs to 2.5 CR. So certainly based on that, so we are going to launch multiple premium projects, as well as we'll continue to have the affordable mid-segment projects in township. So we are confident of achieving a 1.5 to 1.6 million square feet year on year with a better price realization, certainly.
Got it. And Rahul, you said that if in next 3-4 months, whatever is the remaining launch pipeline will get launched. So close to 6 million square feet will launch, probably in this year, or maybe a 1 month here and there. But going forward, FY24, what kind of launch pipeline that we are looking at in terms of million square feet or number value?
So currently, we have the unsold inventory. I mean, if you add my unsold inventory plus this 2.77 and minus whatever that we have sold, currently we are sitting with a 3 million square feet of unsold inventory. On top of that, we are going to launch around 4 million square feet, 4.5 million square feet from this. So 7.5 million square feet of inventory that we are going to have. So it is sufficient for next few quarters. As I mentioned in the discussion, so on one side we have the land bank of 15,000 crores, and on the other side we have the potential to close the multiple BD deals. So through that, as on when required, we'll be launching the multiple new projects as well. So it all depends on how the project is performing. Then only we can launch the further phases of that project. But wherein we'll get an opportunity, BD opportunity in new micro markets of Pune and Mumbai, likewise in Bangalore, we are going to launch that to the market.
Okay, so if I understand you correctly, what you are saying is that after the launches in next 3-4 months, probably the pace will slow down and the focus will be on selling the unsold inventory first before launching new projects.
No, see, let me correct. So if the new BD closure is from the new micro market, certainly we are going to launch that inventory, and our focus from BD is to enter a new micro market. So most of our BD deals are from a new micro market. So that will be the added launch pipeline in order to boost our volumes and value from a pre-sales perspective.
Got it. Thanks. That's it.
Thank you. The next question is from the line of Aditya Singh from Robo Capital. Please go ahead.
Hi, good evening, sir. I have this question on the cash flows that we have in the page number 17 of our PPT. The collections of rupees 1260 CR in the 9 months FY23, do they pertain to these 9 months only, or do they address the previous collections also?
So 1260 is the collection for this 9 months only.
9 months only. Okay, great. This was my only question, and also I just wanted to know the expected sales velocity, but you have answered this already in other terms, so that works.
Thank you. The next question is from the line of Jainam Shah from Equirus Securities Private Limited. Please go ahead.
Yeah, thanks for the opportunity. So my first question relates to the pre-sales for the upcoming years for medium to long term. So as we have targeted for around 8 to 9,000 for next 3 years, how we are thinking about FY24 and going forward?
So as I mentioned in the discussion earlier, so we are expecting a growth of 25 to 30% in pre-sales for the next financial year. So that will be to the tune of 2,700, upwards of 2,700 crores.
Got it. So the other question relates to the other expenses. I was going through that the other expenses were of around 15 to 20 crores earlier, and then it has jumped to 37 crore in this quarter. So is it normal run rate that we are expecting given the overall business pipeline that we are having, or is it just one-off of these projects as well?
See, during a launch of the project, since this quarter was a quarter for the launches, during the launches, there are significant marketing expenditures, so that has added to our overheads. And certainly going forward, in fact, from a, the margin point of view, since we are shifting our base to a larger base, there will be some kind of delta in the overhead that will add back to our margin.
Got it. So then, last question relates to the debt. So if we are getting money from the Marubeni in this quarter, and along with that we are forcing some BD to convert into our land bank as well. So how we are planning as a debt number or our net debt to equity? What's a targeted number for that?
So our current net debt to equity is around 0.2, and we have the approval from board till 0.5. So as on when required, we are certainly going to leverage to take the advantage of good market conditions. And likewise, just to tell you, we have taken the pre-approvals from the bank itself. So at right time, we'll take the disbursements.
Got it. That's it from my side. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Rahul Taleli, Chief Executive Officer, for closing comments. Thank you, and over to you, sir.
Thank you once again for your interest and support. We'll continue to stay engaged, and if you have any further questions, please feel free to reach Dipti Rajput at KPDL. Look forward to interacting with you next quarter.
Thank you, sir. On behalf of KOLTE PATIL Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.